And it looks like we are live with our audience at youtube.com. So everybody, welcome to the Bitcoin Treasuries.net MSTR, aka Strategy, aka MicroStrategy earnings call stream. I'm Tyler Rowe, and today we are breaking down Strategy's Q4 2025 earnings. Michael Saylor is leading the MSTR earnings call today that starts at 5 p.m. Eastern, and we're here breaking down all the action and speculation of what Michael Saylor has planned for 2026 as the price of Bitcoin is tanking nearly 50% from its all-time highs. I'm taking a look at my block clock here. We've got the MSTR most recent price in at $107. Bitcoin's price has dropped below 70K into the low 60,000s, and it looks like Eve, the MSTR or the Bitcoin 58K gang might get their price back. Welcome to the show, Yves-Andre Graf from the One Chair Pod. It's great to have you aboard.
Thanks, Tyler. Thanks for having me.
That's great. So, Eve, you've been doing great work with the One Share Pod. You guys are based out of Switzerland, and you're doing MSTR analysis from Europe. So, given that current market snapshot, and it's hard to keep up the last few days with Bitcoin being down, we've got MicroStrategy or strategy down almost 75% from its all-time highs. Bitcoin is down 50%. Is the 4-year cycle really dead, or what's happening with the Bitcoin price, Eve?
Yeah, that's a very good question. I think everybody is asking the same questions. As a Bitcoiner, you've probably witnessed that a couple of times. I don't think it's too unusual, to be honest. And yeah, I mean, it's hard to tell, right? Because we still have all these great bullish news that happened. Obviously, there's still some questions regarding the Clarity Act and obviously what's going to happen with the Fed chair and all of this. So there's still some question marks, but overall, I think it's still we still have adoption growing. We have some amazing news on the Bitcoin side. Fundamentals haven't changed at the end. It's just
Yeah.
price action.
Yeah, that's a great point. Fundamentals haven't changed, and I think that's what Bitcoiners and Bitcoin treasury enthusiasts are talking about. Is the same reason we're here with Bitcoin. What got us here in the first place hasn't changed, and even if we do have a bit of a more hawkish Fed, we know that ultimately, with the way the U.S. government specifically is printing money, spending money like drunken sailors, as we like to say, the thesis for Bitcoin has never been stronger. So, basically, Eve, what are you expecting Michael Saylor to talk about today in the earnings call? Sentiment is horrible when we're into a bloodbath like this. I look all over Twitter, and a lot of Bitcoiners are saying, is this the end? People maybe who are more tourists and haven't been around for a cycle. A lot of my friends whose first cycle this is are sending me, Reddit threads. They're like, is with FUD that we've been hearing since 2017, all through 2020, 2021. What's your read on how Michael Saylor is going to address this downturn in the market?
I think the same way that he always does, right? He has always like those nice speeches prepared, and he's always prepared for all these, like the usual FUD and the usual questions that he gets. So I don't expect that to change. He's gonna, I think he's just gonna keep going with his narrative, and I mean, we've seen it, right? We've seen, and maybe we can go into it a bit later. Is this shift in the strategy that they had, where they're now using way more the common share ATM to accumulate Bitcoin, and in combination with STRC. Obviously, as you pointed out, with the sentiment, STRC is also down. It's not at par right now at all with 100, but just in general, I think that's going to be he understands that accumulating Bitcoin is still the name of the game, and I think he's just going to pound that over the earnings call.
Absolutely. Totally agreed. We've got Soleil from MSTR True North, the options guru, joining us. Welcome to the stream, Soleil.
Thanks, Tyler. Good to see you again, Eve.
Hey.
Yeah, so we were just talking about what we expect Saylor to talk about on the earnings call, and there's a lot of criticism, especially from maybe Bitcoin Treasury tourists or people who are more bearish on the Bitcoin Treasury strategy or play in general, who criticize, that Saylor can always only raise money when Bitcoin's price is pumping. I think he's proven that narrative false to start the year. In January, he's basically bought more Bitcoin than the entire mine supply over that same time frame by 276%. So Saylor is gobbling up coins. He's putting them into cold storage or into multi-sig custody and taking those off the market for good. How do you see the lay of the land as we sit right now, Soleil?
Yeah, I mean, he's proven that he can buy the top forever and get criticized for that, and he's also going to keep buying all the dips. So it's just par for the course for him. There's going to be no change in their strategy or their philosophy.
Absolutely, absolutely, and he really is going to get to buy the dip. Eve was talking about the STRC product, and that was the big unlock this past year. As Stretch is basically, I think their best digital credit offering. It's really a money market killer. If they can maintain a peg on that, I noticed earlier today it was trading around $95, but Saylor does have the opportunity to increase the dividend on that and try to keep that at the $99 to $101 target range. Do you think this is a money market killer, and what's it going to take for the rest of finance for people maybe with their retirement accounts, financial advisors across the world to allocate their customers' funds into STRC, Eve?
Yeah, it is. It is a killer. Oh, I'm sorry. Was that for you? Go ahead.
Oh, no, go ahead. You can go.
Oh, no, I was going to say it's in its infancy, right? So they're already in short order hitting par, and it hasn't been pegged from month to month, but they've shown how much they can raise in just a week, even like a short week. So it's iPhone moment. It's the catchphrase or whatever. But yeah, it's gonna definitely be a killer. And the bond market is hundreds of trillions of dollars. So there's no shortage of demand.
Absolutely. No, I think that's right. I'm going to bring Bobby on from Voltage. We've got going to call him up to the stage really quick to cover a really exciting announcement. This is a little bit of a departure from our coverage from the MSTR stream, but there's a big announcement in the broader Bitcoin ecosystem that we're going to have Bobby talk about. So I'm going to Soleil, I'll put you into the green room real quickly, and we'll
Sure.
bring you back shortly.
hmm
So Bobby, basically, the big announcement from Secure Digital Markets and from Voltage. Secure Digital Markets is a firm that's providing liquidity in the Bitcoin markets and offers liquidity to derivative and lending products. And with your work at Voltage, you guys kind of provided for this big announcement the technical solutions to transact with speed and ease on the Lightning Network. So I kind of want to just start with the headline, Bobby. There was $1 million Lightning transaction. So for folks who have been hearing that, the Lightning Network is just for coffee purchases for years and years and years, what actually changed recently? Was there some sort of technical breakthrough, or tell us about this milestone about the network finally, looking like it's going to be ready for prime time?
It wasn't as much of a technical breakthrough as it was institutional adoption. The receiver of this transaction was Kraken, who is a institutional leader, and Secure Digital Markets, they utilize Voltage, and they're a customer of ours. And we had this vision of, let's show the world what Lightning is capable of, because there was this narrative, it's for micropayments, which is incredibly novel and just world changing. But that's not the only story here. And what we wanted to do was just showcase that over the last year, large exchanges and institutions are adopting Lightning at an accelerated pace, over 900 million users with access to it. And this transaction is just a stamp in history of the capability of Lightning and what it's now doing for institutions.
Yeah, can you walk us through just a little bit what that looked like in practice with this transaction? How long did the $1 million settlement take? Famously, TradFi banks, when they're settling transaction, they're notoriously slow through the wire sales. For final settlement. So that it can take hours, it can take days. I've had wire transfers hung up for days that were going internationally. And obviously there's fees and middlemen all along the way, taking big chunks out of those transfers. So how does this settlement compare to the traditional banking rails?
Yeah, I mean, we all know the pains of traditional banking rails. We've grown up with them. For this in particular, it was under half a second. It was instant. We did a test transaction first. Everyone shared a video on X, SDM and ourself we did, and the transaction was under half a second, and it was actually faster than our test transaction, which was kind of mind blowing. But it was unreal. It was just like multiple organizations who just have this vision for the future who are saying, let's try this, let's do it. And it worked as expected, whether you're sending a smaller payment through the channel or a larger one, when the liquidity is there, the payment sends. And that's, I think, one of the most exciting things for, innovators like Cash App who have, really brought Lightning to the forefront, I believe, to like individuals. And now we're doing it for institutions. So it's an exciting time.
That is really exciting, and to talk about it taking less than half a second is just mind blowing, because we often talk about Bitcoin on-chain payments as being instant, but we know that can take 10, 20, 30, 40 minutes for multiple confirmations. But for treasury teams and CFOs that are watching, what kind of infrastructure planning went into making this work? I'm guessing you guys didn't just fire up a mobile wallet and hit send. But can you talk about the channel setup between STM and Kraken, and how institutions could be, I don't know, thinking about the Lightning infrastructure moving forward, and how did the collaboration even start, Bobby?
Yeah, so fun story. There's a Bitcoin mastermind group I'm a part of, and I met a lot of these folks in Jackson Hole at an event like 4 years ago, and I got an introduction to Mustafa at SDM, and told them about what we were doing. They understood the value of Lightning and wanted to bring that to the lending space, which they're actively. We just see where Lightning is going, and we wanted to accelerate that timeline. And these two organizations, they wanted to do that too. Kraken being an early pioneer in Lightning, and Secure Digital Markets, our customer, they're running our infrastructure. We have 99.9% uptime, which is mission critical when it comes to institutions managing payment flows. And I think most importantly, uh, for CFOs and treasuries, Lightning is a payment rail that can facilitate small or large payments. And one of the most exciting things we're seeing treasuries be excited about is the yield opportunity on Lightning, which is totally separate from this. But I think this really is going to draw eyes to Lightning, validate that a lot of the narratives of the past are in the past, and it's going to create a lot of tailwinds for the adoption of Lightning as a payment rail for institutions as a whole, beyond just Bitcoin being a store of value.
I love that. I love it. For Bitcoin treasury operations specifically, you told me off air that this enables, better loan management, working capital optimization. Lending desk can ensure that customers have better experience, fewer margin calls, the whole works. So, for a company that's holding Bitcoin on the balance sheet, how does instant final settlement, change the playbook compared to, base layer transactions?
Yeah, yeah, I'm learning so much from all these CFOs at these different companies and their unique and nuanced needs. But one of the things that seems to be pretty consistent is everyone's managing risk in a different way. And when you're managing risk, you need instant settlement. Working capital is incredibly important for a business, and having it where it needs to be when it needs to be there is key. And Lightning not only, enables you to send payments, but when it comes to managing like a lending desk at SDM, you're giving loans to folks, whatever the rate may be, and you can now, as a business, taking loans out, you might want to run a Lightning node, deploy capital into Lightning, leverage it as a payment rail, and support the growth of the network and the network effect of Bitcoin. And what Cash App did at Bitcoin 2025 really painted the picture and said, hey, this institution is earning 9.7% yield over Lightning yearly for sending and routing payments and being a hub in the network. And now that we have institutional size payments happening beyond what we see in retail, this really draws forward what I believe to be is the future of Bitcoin being not only a store of value, like we said, but a payment rail. And when you have larger flows going over Lightning, this creates an opportunity to earn yield. And you can imagine if you have a loan at, let's say, 7, 8, 9%, you're earning 2, 3, 4% in yield conservatively, being a core node in the network. This creates a lower blended rate for risk management, and I think that's going to be a very interesting thing for CFOs to begin exploring and understanding how it can play a role in the stack of how they manage the capital for their organization.
Yeah, that's so great to hear. And you know, like looking ahead, we're seeing stable coins coming to Lightning through Taproot assets. You know, if Lightning can handle $1 million Bitcoin transactions in less than a second, what does that mean for USD flows for institutions? Are we is it going to really be legit competition for traditional payment rails?
I think so. I mean, it's crazy seeing this week all these crypto VCs and people in crypto saying I'm leaving, and then all the Bitcoiners are just being like, everyone's going to finally realize Bitcoin is the innovation. So while price is painful for some, the recognition of what the true innovation is at the very forefront. And while there's so much noise in the air right now about the emotions of price moving, the infrastructure is being built, the groundwork is laid, and the properties of Bitcoin have not changed at all. And I think stablecoins being probably the biggest product market fit in all of crypto for all intents and purposes, they are now capable of coming to the Lightning Network. And a lot of payments on stable coins are lower, but there's a lot of large flows on stable coins, especially with institutions. And I think this just paints the beginning of the picture that stable coins need to be on Lightning immediately, because even beyond just like larger payments, the consistency and the unit economics of and the incentive structure of a peer-to-peer network that keeps fees low so they don't spike like altcoins, and the reliability of a peer-to-peer network that does not have a global shared state like Paulo Arduino, the CEO of Tether, shared at Bitcoin 2025. That's going to be mission critical for the scaling of stablecoins. Tether makes up 40% of all crypto fees, and they want to bring that to zero, and Lightning will help them do that.
I love it. For anyone just joining the stream, big news is that there was $1 million payment that was transacted over the Lightning rails, and Bobby from Voltage, in partnership with SDM and Kraken, is here, telling us about this exciting announcement. I've got one last question for you, Bobby. I know we're up against time here, so for the skeptics out there, there's CFOs watching, treasury teams watching, they're thinking this sounds great, but I don't know, we're not ready to bet our treasury operations on Lightning. What would your message be to someone like that?
Yeah, just think back to your first Bitcoin transaction. You had no idea to know what to expect, and then it settled in a decentralized way. I think that's eye-opening for most of us, and it gives us perspective as to what's possible. The same's true with Lightning. It may feel new, it may feel different, and it's easy to be skeptical about something you haven't seen live in production, but we've got a lot of success metrics and proof points from Cash App to this situation, and it's very clear that Lightning is institutionally ready. Let's go.
I love it. Thanks so much for joining us, Bobby. We look forward to more exciting news in the future.
Appreciate you guys. Thank you.
Great. Take care. All right. What do you think, Soleil? That was big news to hear about the Lightning transaction. Looks like more and more payments are coming to Bitcoin, and it's exciting to see these real world applications, and specifically how treasury companies can use the Bitcoin network to advance their goals.
Yeah, I love it because I'm one of those people who thinks that Bitcoin has to become a medium of exchange. It can't just be a store of value. And I guess that's why I've never been one of those people who are a never sell your Bitcoin type of person, because I think some people take that and kind of mistakenly internalize it to meaning that you can never spend it on things that you want or things that you need or things that make your life better. And I'll never forget the first time I used Lightning, and it was at PubKey on a triple smash burger. And I was so excited, I was gonna get to actually use Bitcoin somewhere, because my brother-in-law told me, I just won't stop shutting up about Bitcoin. And he's like, I don't really believe it until I can buy a candy bar at 7-Eleven, And so I was so excited when I came back from PubKey, and I was like, I bought a triple cheeseburger with Bitcoin, and I was like so nervous, he scanned my phone, and I was waiting, and I was like, did it work? And he's like, yeah, you're good. You paid. I was like, oh, sweet. This is amazing. So that's a far cry from $1 million transaction, but yeah, it's gonna, Bitcoin's gonna take over the world. It's gonna impose the free market on everyone and everything. So I'm here for it.
It is. And what do you think, Yves? For a long time, I kind of fell into the narrative that, Lightning is only for these micropayments, but it's really cool to see, a high value USD equivalent transacted over the network.
Yeah, absolutely. I mean, obviously, like right now we're thinking in terms of layer 2, but there's been talks about having layer 3s and even other layers. So obviously, probably Lightning will be one of the main layers. So we will still be transacting huge amounts of money there because you would just need to. And at some point, we'll probably have even other layers for really micro payments as we go and as we need to scale as well. So definitely.
Cool guys. So let's get back to it. Let's talk strategy, what Michael Saylor has cooking. I mentioned before that Saylor is gobbling up all the newly mined supply so far this year, and really hoping he's able to buy the dip. So do you think capital markets will be open to him, Yves? Is it going to be tough for him to raise, during this downturn? Obviously, if this is a bear market that lasts 6 months, 12 months, 18 months, I could see things getting a little hairy with sentiment being so low. But what do you think is different this time around for Saylor being able to raise money in a bear market?
Yeah, so we've touched on it a little bit before with STRC, right? We mentioned now that they basically have this new flywheel with MSTR common and STRC, and I think it was quite funny to see because I actually realized that watching the True North, one of the True North episodes, and I realized later that Soleil mentioned that he realized it watching One Chair with Dan. So that was quite funny. I was like, wait, you talked about it before. But yeah, basically this flywheel is just through this STRC perpetual preferred that now strategy has this lever with the dividend variability to be able to increase. Now they have a little bit of control in order to reset or be able to reignite this engine, this accumulation engine. And right now we see now STRC plumbing, but if it keeps at this level, that means that next month strategy will raise these dividend rates on STRC, and at some point it's going to go back to par, and they will start accumulating again some Bitcoin. And on the flip side, they will still be accumulating with the common share, because the common share, even if it's still at a low price, when they really start, or when there's a bit of sentiment again that gets a bit higher, they will be able to get some liquidity, or there's going to be some liquid action, and they will be able to use the ATM on that as well. And yeah, so the engine will restart, definitely.
Totally. Q4, thinking about the earnings that are going to be announced today, and then Saylor's going to follow that up on the call with his typical bullish presentation that always is really exciting for me. But Q4 wasn't as aggressive. They accumulated, I think, 30,000 some Bitcoin. They've already eclipsed that, their Q4 accumulation in just, January. So, part of the narrative in Q4 was this USD reserve usage that Saylor started. And Soleil, I've heard you talk about this on the MSTR True North stream. You guys do a great job of covering this, but can you catch our audience up to speed on why Saylor, it's become kind of a meme to have a US dollar reserve when you're a Bitcoiner who's trying to accumulate as much Bitcoin as possible. But how does this USD reserve help kind of dispel some FUD that's out there? Tell us more about that.
Yeah, it's funny because when it came out, I hated it. I was like, melting ice cubes, get that out of here. But like Yves was saying, Dan did a great job, and I guess there's a reflexive flywheel there too. You can watch True North, and then I'll watch, Dan on One Chair. So it's reflexive in that sense too. We got reflexive podcast technology here. But yeah, it's going to serve multiple purposes. They're going to improve their eyes in the ratings agencies, number one. So I think this is going to clear the way for more institutional adoption. But number two, it takes all of the fear of will the dividends pay out, out of the equation. And the other thing that is, I think at least I'm only realizing now with this downturn, is that they can still ATM stretch if they can get it back pegged. And even though you could think about it, well, wait a minute, do they want to ATM the common to pay those dividends? But they've already actually sold the common to fund the reserve at higher prices. So it's not like if they ATM stretch now, you can say, oh, well, they just have to pay with the common on these low prices. No, they actually ATM'd at 150 a share, 175 a share, 200 a share. So that USD reserve was actually funded at a higher MNAV. So there's a lot of intricacies that I think are going to only make themselves available as we continue to just think about them. And, every time strategy comes out with a new innovation, we just, it's a blessing for us because we've all got something to cover. But it's just going to be this endless cycle of trying to figure out what this means and what that means.
Absolutely. I think, Saylor has dispelled a lot of that FUD, and you raised a key point. Famously, Saylor's got a credit rating on his common equity of a B minus, where, the rating agencies just didn't even, they gave actual zero credit to the Bitcoin on the balance sheet for strategy. But in part of the FUD from a lot of the bears and the shorts, the Jim Chanoses of the world, were that strategy wouldn't be able to pay the dividends, that it was a Ponzi scheme. We're going to hear this every year, every 4 years, people making the same claims, just like we hear about Bitcoin. We're going to hear the same FUD all the time about Bitcoin treasury companies, but to see that Saylor went to market just like that and was able to raise money to pay the dividend for years. We've seen U.S. dollar reserve from Strive as well to pay their SATA dividends, and I think Saylor's just again innovating and drawing up the playbook from scratch, to borrow a metaphor. And it's going to be cool to see a lot of these treasury companies follow in Saylor's footsteps. Sentiment is down. We've seen a little bit of M&A activity, some acquisitions in the Bitcoin treasury space. Yves, do you have any thoughts about whether or not we see, some mergers, some acquisitions continue in Bitcoin treasuries? Saylor has talked about that he's not planning any of that, but it could be a really cheap and accretive way to acquire some Bitcoin in a downturn. What do you think, Yves?
Yeah, so here, as you mentioned, Saylor already mentioned that he wouldn't do it. So strategy, I don't think will be doing that anytime soon. Other players could, and we had an interesting talk on the podcast with Matt Cole. He mentioned that they would be open to M&A action, and other companies, for example, in Europe specifically, because in Europe you have smaller Bitcoin treasury companies, and in order to issue those perpetual preferred shares, you need some scale, and none of them really have that scale. So potentially there I see a little bit more M&A action for sure. And there's also a concept that I thought interesting, and Sander from H100 mentioned, potentially also having alliances. And that's something that we probably need to look a bit deeper into, but that would be also something interesting, because suddenly if you have partnership between Bitcoin treasuries to exactly try to scale and issue more perpetual preferreds on that sense, I think that's an interesting idea to pursue for sure.
Yeah, I think you're right, because you have to have a minimum stack. You have to be able to use that as your collateral to issue a certain number of shares. Like a traditional capital raise, we talked about this a little bit last night, but a traditional capital raise is like somewhere between 2% and maybe 5% of the valuation. And so you can't just say, oh, I have 10 Bitcoin, let's issue preferreds. Like you have to have a stack. So I think that's accurate, Yves. Like we may see mergers, not because one of the companies just can't handle it and they're drowning and they need to be rescued, but hey, let's combine our stacks so that we can now participate in these, continuous raise strategies.
Yeah, well said. I couldn't have said that better myself, Soleil. And each of these Bitcoin treasury companies, the small ones, the large ones, they're all businesses. We heard Saylor talk on another podcast about, why wouldn't your business go into the Bitcoin treasury business, right? Every business should be doing that, and they're all going to find their niche. For public companies specifically, there's going to be different ways to raise capital, right? It's not going to be just this digital credit model. Maybe it is Bitcoin denominated convertible bonds. Maybe it is, some other way to raise capital through different equity products. Maybe it's a merger and acquisition. Maybe you have a really strong and robust operating business that can accumulate, Bitcoin with your cash flows, and you don't need to tap the capital markets as much. But really excited to see how this grows. We're still in the early innings, the infancy of the Bitcoin treasury framework, and we're tracking all those right over at bitcointreasuries.net. So one thing I said this morning, I was on a call recording a session with Pierre Richard and Alex Lezette from Capital B, and I talked about Stretch really being I think, one of these killer apps for Bitcoin. I think we've talked for a long time, is there going to be a killer app? Is it going to be Lightning? Is it going to be some sort of payment processing? But I think, not, and Pierre said this really well, not every person in the world can handle being the sovereign man or the sovereign individual, right? Not everyone is going to self-custody Bitcoin, or if they do, it's going to take generations to really, kind of lay that foundation and that framework. So do you guys think that Stretch is a way to kind of backdoor educate people about Bitcoin by just letting them get a little sampling of it in their retirement accounts, and then maybe they're more curious about it, maybe their kids get more interested in it, maybe a family office, starts off with Stretch, and in a couple generations their kids are self-custodying Bitcoin. Yves, how do you think about that, and is Stretch a Trojan horse to traditional finance?
That's a great question. So my thoughts here is I don't think Stretch would be the tool to really get additional Bitcoiners into it, because at the end I think the people that want Stretch, they're mostly interested in the yield. So it's a very fiat mind that I would say is tapping into that, right? Pool. I would say probably if you would ask me, then I would say a common share of a Bitcoin treasury would be more appropriate if you want to have exposure to Bitcoin, and then maybe later say, okay, I want to start like if you want to go into that path, then the common share, in my opinion, would be more appropriate. Stretch is more this other side with the people that maybe are exactly a bit older. They don't want to have so much volatility. They still want some yield. I think that completely makes sense. And it also just improves your portfolio through this high yield, right? And I think this STRC product will probably save a lot of pension funds and these types of investment pools in the near future, considering the way that things are going just in general from a finance perspective. So I don't think STRC is really the way that you would really orange peel people. At least that's how I see it. So I don't know, maybe Soleil, you have other thoughts on that one.
Well, you piqued my interest there. You said that it's going to help out with pension funds. You think a lot of the pension funds are going to be insolvent, but they can use Stretch to basically save themselves from defaulting on their obligations?
I believe so. Yeah, I believe it's one of, so there's two ways, right? Because that's what I think is really interesting with the Bitcoin treasuries. So when I started getting into it, and then you see how it penetrated those indexes through the indexation, like MSTR entering in the QQQ. Okay, they haven't been in the S&P 500, but they're in other indexes, and through there they get in the pension fund. So I thought, oh, that's a great way, because when I got into Bitcoin, I also saw this black and white type of situation, right, where it's going to be the people that have Bitcoin and the people that don't have Bitcoin, and it's going to have the haves and have-nots. But however, with the Bitcoin treasuries, I saw, oh wait, actually that's a way to kind of do a bit of transferring of the wealth into also people that don't have Bitcoin, but they will have exposure to Bitcoin. So that was the first aspect. And then when Saylor came with those perpetual prefers and high yields, I was like, oh my God, this is the second part of this, because suddenly people have exposure, but to a different level, because you don't have the volatility, but you still have the yields. So you're saving those pension funds that are probably not performing as they should. So now you have suddenly two products that are getting in those pension funds that have some sort of Bitcoin exposure. And yeah, that's one of the things that really got me interested in the Bitcoin treasury space to begin with, because I thought that's a great way to exactly have the other part of the population, the normies, have exposure to Bitcoin at the end.
Yeah, I like that. Pensioners probably will be in a lot of trouble if they can't find products like these. I do think there is a possibility that it could be a Trojan horse, in the sense that I think a lot of people get into Bitcoin for the number go up technology, and it's almost kind of like a bait and switch, right? You just like, oh, I just want to get rich. And then all of a sudden you're like, we got to, eliminate the control system. You're like, well, wait a minute, how did I get here? And I think that's why they say getting off zero is the most important thing, because then you care enough to listen and to dig. And so could stretch be something where fixed income people would never take the time to even pay attention or listen to a podcast like this, and then they kind of have to because their income depends on Bitcoin not failing? I think there is a possibility that it could lead to that, but to a certain extent, I have to agree with you that you're not like you know, you're not going to take Bitcoiners and convince them to move a significant portion of their stack into stretch. You're really targeting normies and, you know, to kind of get into the fixed income, a better fixed income product. And I suppose that could be a funnel towards Bitcoin adoption, but I think it's a little bit less likely than the traditional route of, hey, I want to get rich overnight, and then you become, you know, laser-eyed at some point.
Yeah, yeah. You know, the way I frame it is, hey, you can get S&P returns with Stretch right now, you know, through a debt instrument, basically, and that's a cool way to frame it. I'm sharing a little bit. Let me just get this on the screen. We're looking at strategies. They have dropped their announcement, and of course, we know that they're holding 713,502 Bitcoin. Saylor is announcing officially a 22.8% Bitcoin yield achieved in the fiscal year 2025. And they were the largest U.S. equity issuer, you know, in the markets in 2025, which was where, you know, Saylor was able to raise through you know, that through his equity about 8% of all the equity issued in the markets. I mean, for a Bitcoiner watching this who may have never invested in equities or hasn't been as interested in equities as maybe some in the Bitcoin treasury space, that's huge news. What does that mean, Yves?
Sorry, could you repeat that part? I
Yeah,
was just
so
looking at
like,
the
you
numbers.
know, yeah, absolutely. So yeah, I can highlight it. The fact that Saylor raised 8% of all of the equity that was even issued in capital markets, like that's a big deal. Like, and that means something to a TradFi person, right?
Yeah, it goes back to the liquidity, right? I mean, the fact that this monster is just so liquid, it's quite amazing. And I think that's something that you guys also on True North talked a lot about yesterday, Soleil, and yeah, it's really fascinating to see how much they're really able to issue just in general, considering even when despite the market just being choppy in general. So that's pretty amazing, and all of that is just powered again through their assets. So the Bitcoin on the balance sheet at the end of the day. So I think it's just mind-numbing when you start really thinking about it.
Yeah, and if the liquidity is important, but the other part, if your market cap is the limiting factor on the total amount of the capital raise, every time they ATM the common, they increase the market cap. So that just justifies an even larger capital raise, and this just keeps going back and forth. Now, if it wasn't built on Bitcoin, like if it was just built on a deflationary asset, then this would spiral out of control and result in absolute destruction. But if you are confident that Bitcoin is going up forever, you know, Laura, then this actually works into infinity. So if you're a Bitcoiner, this strategy should make perfect sense. But if you're just stuck in the fiat mindset, then of course you're thinking that this ends in disaster.
Yeah, totally. And you can see someone who hasn't done the work why they might instinctually or reflexively think that this can't work. But as we know, Bitcoin usually takes some time to grok and to understand. It's just these numbers are mind-boggling. $25 billion raised in 2025. Stretch, which is, you know, a preferred equity product, raised an aggregate $3.4 billion. We saw their other preferred equities raise a lot of money. Again, Strive launched their SATA product, which is really cool, and that was $200 million, and that's really exciting, and that's a lot of money, you know, for someone, you know, a non-seasoned issuer basically to raise that kind of thing. But Saylor's just dwarfing these numbers, and at some point, if you haven't paid attention to Bitcoin, if you haven't paid attention to Michael Saylor, or it's fallen on deaf ears, at some point you've got to open your ears, get your head out of your butt, and like just see what he's doing. It's insane, and it's only going to increase, right? Saylor did a kind of a tour of the Middle East in this past quarter, where he was talking about how we're going from a 20th century asset of gold underpinning everything to the digital asset in the 21st century, which is Bitcoin. And that's going to underpin finance and underpin capital, basically, after this intermediary, which was a fiat stage. And, the Middle East, specifically North Africa, their whole economy was built on, I would say, the fiat commodity that came to fore in the 20th century, which is oil. And Saylor was just really harping on, hey, your sovereign wealth funds, your governments need to take a look at Bitcoin, because this is the wave of the future. Yves, you and I chatted before the podcast about Saylor's tour of the Middle East. And what do you think that means? What's the significance of him going there and seeking to raise capital and just educate some of these sovereign wealth funds on the power of Bitcoin?
Yeah, I think it's just again, he's just signaling the power of Bitcoin. But one thing that I find interesting is he's there obviously with the Middle East, but I actually traveled not too long ago to Abu Dhabi, and they actually have some huge miners there as well. So I do believe they already understand the power of Bitcoin. The fact that Saylor was there is just like, again, pounding on the message, I believe, and they obviously have like a lot of wealth. So they're probably like one of the top places that they could get into this whole digital capital, digital credit and digital money idea that Saylor was talking about. And I think that's one of the country. Also, there's one of the places where they would be able to understand this technology as well, because they're so forward-looking in that area. If you go there, you see that they're very focused on technology in general and all of this. So I think it's the right place, and that's why he was pounding the table there to all those different countries. And I think it just makes sense, and that's a bit about the time that he started also accumulating a lot more Bitcoin through this new flywheel, by the way. So coincidence? I don't know.
Yeah, and I was just looking again a little bit more through the earnings, and you raised some really key points. But one of the headlines, I think, from the bears throughout this earnings, and I think Jeff at True North nailed it, because he does a great job of tracking this, is that MSTR Strategy reported a $17.4 billion loss. So 4 times a year with each of these quarterly earnings, they have to basically mark their Bitcoin to market, which is a far greater improvement based on how Strategy used to have to characterize their earnings. They basically wouldn't get credit for their gains on their Bitcoin, but had to mark down their losses. So now, Saylor is taking his medicine, at least in the probably some of the headlines for TradFi people who don't understand the Bitcoin trade, and they do have that big loss. But Soleil, tell us how much of a nothing burger this $17.4 billion loss is for Strategy.
Yeah, I think it just shows, like, when they had the big wins and any of the losses, it just never matters. They have their earnings call, and the market isn't surprised, because there's almost no such thing as an earnings surprise for Strategy. When you're following Tesla, or it doesn't matter, Apple, you want to know how many iPhones they sold, you want to know how many cars they sold, how many deliveries, how many this, how many that. And the market makes predictions, and then they either beat earnings or they miss, and then the market reacts to that. But with Strategy, what are we expecting them to say? Like, we know exactly how many Bitcoin they are, and we can multiply that times the Bitcoin price. So they can say something, and they can announce a plan, and the market can react to that. But to the extent that, is the market going to care about the the statistics? Is like, no, we already knew what the statistics were. They're just going to nail it down to the exact number of Bitcoin or something. But yeah, this is nothing for a Bitcoiner who thinks it's just going to go up at some point in the future.
Totally. I'm gonna hit you guys with some rapid fire as we kind of bring this call to a close, and let's have some fun here. So, Yves, I'll start with you. We've talked about this a lot. Is the 4-year cycle of Bitcoin actually dead, or was it a 3.9-year cycle? What's your lay?
I'm gonna go with yes, it's dead. Yeah,
Soleil, 4-year cycle, dead or alive?
Dead.
Dead. All right. I I'm not ready to say that the goose is cooked, or whatever the phrase is there. I think we still might see, it seems like the thing that's driving this recent downturn might be the stalling or the behind the scenes pulling of the Clarity Act in the broader crypto space, and the Fed chair announcement from the Trump administration being someone who's hawkish. But as we know, it doesn't matter if you have a hawkish Fed chair or not, because the U.S. government's not going to slow down on the money printing, and the Fed's going to have to accommodate the U.S. government. It's just a matter of when. Let's hit another one. I guess that's a good point. We're back at Bitcoin prices that have basically wiped out the last year and a half of gains in Bitcoin price since the Trump administration took over. Trump administration, Soleil, a good thing or bad thing or neutral for Bitcoin?
Every administration is worse than the last. So uh, it until Bitcoin fixes that, I'm not optimistic about any of the administrations.
Yeah. What do you think, Eve? Trump administration, good or bad for Bitcoin?
I'm gonna say good because at the end of the day, it's because of the governments that we have Bitcoin, and they're the biggest marketing team for Bitcoin at the end of the day. So good.
Love it. I love it.
It was
And
better than the alternative, but you know, I'm
totally,
not saying
totally.
that it's doing like they actually fumbled the ball like in a huge way. I mean, the guy won. He had historic approval ratings and could have handled this like a dream and just delivered on promises, and he would have gone down in history as probably, the greatest president in the last 50 years. And it's just been a complete disaster.
Yeah. Yeah. I mean, seeing him drawn in so many directions, seeing Congress not really being able to focus on, really one, two, three key issues that they promised, is something that I'm not bullish on any administration being able to execute. I got
And
another one for you.
you got the law
Yeah,
hanging behind you by Bastiat.
I do.
You're repping back there.
Repping.
Justice justice is
Yeah,
the absence of injustice.
that's right. One more for you guys here before we close off the stream. Um, Quick hit. Does Michael Saylor issue a new digital credit product, a new preferred equity in 2026? What do you think, Eve?
I'm gonna say yes,
All right.
probably in a different currency though, and STRC like
You
most
got it.
likely.
Are you buying Stream? Are you buying Stream? That's the European
No, I'm in
version.
Switzerland, and Swiss franc is a very strong currency. So unless we have something in Swiss denominated currency, then I can't buy, because even the yield doesn't outside the currency
Wow.
change.
Wow.
That's crazy.
Incredible. Strong
Yep.
currency. What's that? We're the world
Yeah.
reserve currency, and it's a melting ice cube. What do you think, Soleil? Is there going to be a new preferred equity offering from Saylor this year?
Yeah, they still owe us Canada from last year that they announced. And I agree, they got to give us a stretch version for Europe. And so, if you're going to come out with the iPhone, why wouldn't you just market that everywhere? So I would say at least two, maybe three.
You got it. And thanks, guys, so much for joining the BitcoinTreasury.net, the first stream where we're covering the MSTR earnings call and Michael Saylor. I'm getting my popcorn ready, the hot chocolate. I'm going to cuddle up by the fire with my wife and the children, and see what Saylor has in store for us. Thank you guys so much for joining us. We've got Soleil, the options ninja at night, who says nee, watch his daily stream, watch the One Chair pod with Eve and Quentin. You guys are great. Thanks for joining us, and stay tuned for our next rip.
Thanks, y'all.